In spite of Drought 2012, farm income is projected to hit record levels. I'm Feedstuffs editor Andy Vance, in for Max Armstrong in this Dateline Drought Update, brought to you by Genuity's Drought Guard Hybrids. Of course, Max is out in beautiful Boone, Iowa for the final day of the Farm Progress Show. I'm sure you've enjoyed our coverage of Farm Progress Show 2012. Let's talk about what's happening in the world as it relates to drought. The U.S. Department of Agriculture's Economic Research Service this week released its latest forecast of net farm income. Here's what we know from the forecast. The expectation for net farm income is generally pretty strong, but not uniformly across sectors of agriculture. Big picture numbers, USDA has projected net farm income now at $122 billion. And that means a near record in terms of nominal terms. The $122 billion figure and net cash income at $139 billion are going to be nominal record values. Nominal as in not adjusted for inflation, just in terms of the big number itself. Crop farm gains are expected, according to the report, to more than offset losses relative to livestock production. That is essentially due to higher feed costs and potentially a decline in wholesale milk sales of a fairly significant order. The August 28th report from ERS took a look at the expected increases in income reflecting large price-led gains in corn and soybean receipts, as well as large increases in crop insurance indemnities. That should be no surprise. Yields for both corn and soybeans are anticipated to be the lowest in, say, 9 years or better. Be that as it may, a 40% upshot in corn and a 37% gain in soybean prices likely to more than offset 20% declines in yield for both corn and soybeans. Livestock producers, on the other hand, have a much different story to talk about. Production expenses forecasted to post a huge increase, and that's true for crop producers as well. But in terms of livestock production, after a 20% feed cost increase last year amounting to $9.2 billion, livestock producers will see feed costs escalate another 13% this year, tallying $7.2 billion. If you don't have your calculator out, that's $16.4 billion in 2 years. Now, a 6% rise year over year is what ERS is projecting for overall agricultural production expenses, $18.6 billion. So that means nearly 40% of that total production expense increase is borne in terms of higher feed costs. Since 2002, ERS projects that nominal total production expenses have gone up $137 billion, 72%. Now, if you adjust that in for inflation, production expenses this year will eclipse the previous record set back in 1979. Now, it's not all bad news. Overall, farm equity continues to improve. ERS expects that debt may go up slightly, but asset values this year will more than offset that increase in debt, and farmers' ability to repay back their loans, again, across the broad spectrum of agriculture, expected to continue to be very strong, with utilization of available capital at its lowest level since about 1970. For more on this story, you'll want to check out the cover of the September 3rd edition of Feedstuffs, the weekly newspaper for agribusiness, or visit us online at feedstuffs.com. And now here's a look at what happened in the markets.
This is Arlan Suderman reporting to you from the Farm Progress Show near Boone, Iowa, filling in once again for Bryce Knorr, who's still on assignment. Today's markets were once again related to the weather, as we saw triple-digit heat across many areas of the western Midwest, stressing soybean plants late in their development and removing hopes of being able to see a late recovery in the size of the crop. We've been seeing those crop ratings start to leak lower again, not recovering like they did in 1988, but 1988, the rains came back in July. We've seen some showers in August, but not enough to turn around the fortunes of this crop. Traders starting to understand that, also getting strong weekly export sales now. We have already sold, pre-sold I should say, 58% of USDA's target for the next marketing year. That doesn't start until September 1st, with another week's worth of data still to be factored into that. So some strength in soybeans, a little profit taking before the end of the day. With a 3-day holiday weekend coming up, we did manage a new all-time record high for soybeans at a little over $17.80. and still not seeing that demand slow down. The other place weather was a factor. Yes, drought in the former Soviet Union, dryness made it difficult to get the crop started, and then again late in the season, shortening the Russian crop. The Russian Ag Ministry admitting that this year's crop probably as small as the 2010 crop. Remember, that's the year when we saw Chicago wheat futures double in about 5 weeks' time, nearly double that is, as they put on an export ban. So the trade wondering, will they do the same again this time around? Probably not an export ban. They took a lot of heat for that. They just joined the WTO. They really don't want to do that again, but they have said they're open to other fiscal means, and that includes tariffs that could be high enough to be an effective ban on exports probably later this year. Anyway, they are meeting. Ag Ministry is meeting to discuss it tomorrow on Friday, and so the trade anxious to see. We did see a little profit taking today in the wheat complex, but overall good support. Nobody really wants to be short ahead of that meeting. Corn getting some support from wheat and soybeans for much of the day, but then selling off when the profit taking started in soybeans. Traders simply not buying into the bull story in corn at this moment, continuing to trade the range they've been in over the past 6 weeks or so. So that's it from the Farm Progress Show. We'll be back with you tomorrow.